What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, guys, something I came across today and yesterday as I was doing a little bit of research for the trading week ahead, just bouncing on a few different websites, checking on some rule filings that were approved, seeing when they were going to be put into effect, and so forth. And I came across something that was really interesting to me. Now, before I go over exactly what it is, what it could potentially mean for us, I want to preface this right here. I have never followed a stock nearly as closely as I do AMC. So a part of this could just be something that will be added as we go closer towards the date. And I'll explain everything to you guys in just a minute, okay? But just keep that in mind. So let's get into this. First off, made a video on Friday talking about the insane amount of put options that were expiring out of the money. And I had said in that video, okay, that we had talked about these hedge funds abusing both call options and put options, both in the money and out of the money, in order to hide their FTDs. And something that was put into effect a while ago, especially as AMC price had risen, was getting rid of the 50 cent and the $1 strike prices, because it can just be complete abuse. So I've been checking the options chain, and I know some of you guys don't mess with options. That's fine. I'm not talking about buying or selling options in this video. I'm just saying I like to look at the options chain as it weighs very heavily in how a stock can move, as well as just the interest and momentum inside a stock. And I was scrolling through and I was just checking the weeklies, okay? And I came across, July 23rd, which is, guys, it's only like 5 days from now, just checking to see what the open interest was and so forth. And everything looked pretty normal to me. Okay, I noticed obviously they got rid of those 50 cent and $1 strike prices and so forth. But then I jumped over just out a couple weeks, okay, to August 6th. It refreshed and I noticed that the highest strike price was $120. And I said, oh, okay, like, didn't really think too much of it. Maybe because the stock price is already down at this $35 mark. The market makers haven't yet added this, added that strike price. As the price moves a little bit higher, maybe they will add it, because they still do have time and so forth. Then I went out a little bit further, which August 13th. Now, if we go out even further than that, August 20th, I believe, that's the monthly. Those are the ones that are already, set in stone from a long time ago. Okay, as you can see, these all turn into monthlies. But August 13th, you can see the lowest strike price for AMC is $22, okay? And then the highest strike price is $70. And that's not just the call chain, it's the same thing obviously for the puts. It's, it runs together. It's not just one or the other. So I was like, wait a minute, maybe this is just Yahoo Finance. So I jumped over to Merrill Lynch, and I didn't do Fidelity, but Merrill Lynch and TD Ameritrade, and I found the same thing to be on there. I was like, okay, maybe this isn't a glitch and so forth. And it got me thinking. Now, here's where it comes into play that, well, I've never followed a stock as closely AMC. Maybe, when I was running up, other stocks or so forth, when I was heavy into whatever stock it might have been, I might not have paid this close of attention to this, okay? Maybe they will continue to add different strikes, and I know they will continue to add different strikes as the price moves. For example, if it is August 1st and AMC gets up to $70, they're going to add more strike prices. But where we stand today, if you look, especially how volatile, I mean, even you look at the implied volatility, it's right here, guys, how volatile AMC is, to say that the lowest strike is $22 on the low side, okay? The highest strike, well, obviously it's the lowest, but on the highest side, all right, it's $70. And we've had literally 50 to 100% swings happen numerous times, okay, throughout, even, just this year with this stock. It's very, very interesting to me. So I went back over to the DTCC, all these different rule filings. I noticed there was a couple, and guys, there's so many of these, it's constantly changing. And as well as you can see here, you've got 1, 2, 3 that are literally just amendments to different ones. But I remember that they were literally trying to put a ruling into effect to, like I said, okay, prevent them from abusing these call options. And I feel like this might be a way to be able to limit some of that. Now, like I said, I'm going to have to continue to monitor this, especially if we hang around this $40, let's say between $40 and $50, price. I can't see them adding any other lower strike prices because we're not moving in that direction. Okay, especially like I said, if we stay around that strike price. So it's going to be really interesting to see exactly how that plays out. I even try to do a little bit of research just to find out what goes into figuring out the strikes. Okay, they choose when issuing different options. And I came across this: can market makers manipulate stock prices? And it says market makers may buy your shares for their own accounts and then flip them hours later to make a personal profit. They can use a stock's rapid price fluctuations to log a profit for themselves in the time lag between order and execution. And especially when you can, manipulate the price, why would you not do this? It's literally like using us as like a personal ATM. But that's when I just did a brief little research trying to find out more information on this. But I'm going to continue to, like I said, to monitor this closely. This is something that is new to me, and I really feel like it can be beneficial, especially because, like I said in the last video, guys, seeing this insane amount of put options expiring out of the money. Now, if you bought that $20 put option when the stock price was skyrocketing from 50, 60, $70, you would have had some serious value on the pullback, okay? But you chose to hold this until expiration, expiring worthless. All right, so they're doing this for a reason. It's the same thing why my local, grocery store will originally sell their dairy products for $5 or $6. It's all, like farm raised eggs, butter, milk, and stuff like that. And as it gets closer to expiration, they lower their price, try to get rid of it, because any dollar is better than no dollar. So for them to hold on to these put options, which probably could have been valuable, especially when the price was coming down, okay, because we went from 70 down to 37. I mean, there was definitely some value there, but they chose to hang on to them. So it only makes sense they're doing this in order to hide their FTDs. And I wonder how this is all going to kind of come together. So this is something I came across. I wanted to share with you guys. Pumped for Monday. I'll see you in the next one.